Hello, hello, hello. Good morning. Happy PPI Friday. Bringing on Bob in like 30 seconds. He's got a time crunch, but he's agreed to spend a few minutes with us. PPI coming in hotter than expected. We will get Bob's take. You know what? I'm just going straight to the Bob. Here you go. Bob is on.
Go straight to him.
There we
Go straight
go.
to him.
You're
Now,
on,
am I
Bob.
frozen? I might be frozen. I'm not hardwired like normal. So, Mike, if you can't hear me as I'm rambling, just shut me off. Here's the thing about this particular PPI reading, it's not that dramatic, except that the final demand less food and energy was higher than the final demand that includes food and energy. That's the part you need to pay attention to because that's the part of the inflation equation that's sticky. So while I don't think that this PPI will affect the Fed doing 50 basis points at the next meeting, that's the part you need to look at. Now look at the rest of the bars on this particular chart going all the way back to March of last year. For most of the months, except for 2 months in July and August, the food and energy took the total PPI up. Okay. In this particular month, that has shifted. Now, it could shift back, just like what happened in July and August, but it's telling you that the core inflation drivers that the Fed looks at strong. Okay. It's not just the headline number was stronger than expected, because if you were just looking at it from a headline number, that's the misleading thing about this. Last month was revised higher, and this month was higher than forecast, equal to last month's. Still decelerating from a few months ago, but that core PPI, which is what the orange bar represents there, that's strong. And it got stronger. Not only got stronger than the last 2 months, actually, it got stronger than 3 of the last 5 months and was equal to the late August figure, right? And I'm just visualizing that. It might be a little lower, but it looks to me like it's equal. So that's the concerning part of this. So now CPI becomes a little bit more interesting since this PPI led the other CPI. The other thing I want to point to is crude oil popped after Russia said they might cut production to kind of contradict the price cap. So China's already buying oil from them at a deep discount. We're seeing a pullback there because it isn't necessarily, a pullback from the highs. Same thing that we saw on the S&P chart. On the S&P chart, you saw the after the PPI figure, you saw the S&P drop. Oh God, it dropped over 1% from where it was, which was up. So net, it lost like 1%. And it's kind of pulling back from there now. It's kind of fiddling around. It's still negative on the day, I believe, right, Mike? No, negative versus the open, but not
It's
negative on the
down
day.
from the open, but not from yesterday's close because of the gap up last night.
All right. So, any questions for me? They need to be quick because I need to get off this
Let
screen
me
here.
let
Anything
me
else?
see if there's anything. I'm just scrolling through. Well, there's lots. I don't see any specific questions, so
Okay.
that's
If there's anything, Mikey, text it to me later, and when you do your afternoon one, I can like text you an answer back or something.
all right. Or yeah, and you should go to Discord. Questions for Bob.
I'm going to do that. I'll do that today. I'll go to Discord's question for Bob later in the day and see what it looks like.
Okay. So if you have any
All right.
questions for Bob, put them on Discord. All right. Thank you,
Oh,
Bob.
all right, guys. I'll talk to you later.
All right. Just me again. Bob had a big time crunch this morning. Now let me get back to some other stuff. Good morning, Dave. I took my $20 from my pocket and vanished in thin air. Friend of the devil. Hey, Christoph, thank you for being here. Grand Rising. Both Christoph with a CH and Christoph with a KR. Gary's here. Hello, Amit. Let's see. I hope everybody. Sorry, I had to launch early for anybody coming in late, but I put it in Discord, which is another reason you should pay the very minimal one-time fee just to make sure you can join it, get announcements like that. Good morning, Patrick. You've been watching the replays, just been busy at the office, and you're in tax planning. Market is respecting the upward channel. Yes, it is. I don't know what that means, Coco. Hello, everyone. Where do we sit? Hey, good morning, Stafford. Who else do we have? Good morning, George. Well, let's see. Oh, I'm just trying to catch up with stuff. Good morning, options 22. Lauren, Royal Palms. Boy, everybody here today. So we've moved on to the next futures contracts. This is the roll day for financial futures. If you're on TradingView, they have a really handy new feature. It shows the contract switch. Now you can roll because the contract does not expire in the S&P NASDAQ until next Friday. But you roll, most futures you roll the week ahead, especially things that could deliver physically. All right? Since the S&P is cash settled, but if you want to maintain a position, this would be the day that is the rollover day. And if you're on TradingView, it shows rolling from December, ESZ, to March, ESH. H is the March contract, December is the Z contract. All right. Yeah, I had to put it in Discord because Bob had to be done by 8:05, so we started early. Very nice, Paul. Let's see. You want to see the duck falling? Well, boy, then it's not special, but I will bring on the magic duck. The magic duck. There we go. Good morning, Sashi. Data revisit or dump today. Well, let's see. We had the hotter than normal PPI. Let me just go over the figures. And remember, we have consumer sentiment at 9. Consumer sentiment sort of stinks. I think we'll revisit yesterday's close. PPI coming in 0.3 versus 0.2 expected. By the way, the last one was revised from 0.2. Something Bob did not talk about in the rush status, but the last one revised up, and this one coming in higher than forecast. Core PPI, this was the big one, coming in up 0.4 versus 0.2. Year over year, which is getting to the more minor because you're going to have the base effect in there, just like the CPI, but still coming in hotter than forecast for the core, and the headline number is still hotter than forecast. Now, 30 minutes after the open at 9 Central, we have Michigan's consumer sentiment preliminary numbers. Then we'll get the final ones next week. But also pay attention to the inflation expectations and current conditions. And then it dies down. Pretty much Amazon pulling back, sort of a mixed morning this morning. Fed watch, let's see if they've upped this. Should get refreshed at 8. Fear and greed still in greed mode. The Fed watch tool, come on, Fed watch tool. Don't fail me now. Don't fail me now, Fed watch. Still at 75%, so that's 50s baked in. We had the percent B buy yesterday, and I told you I was watching for between the 50 and the 62.5, which is where we went to. And just touching this. This is not a trend line. This is roughly a best fit median line, not quite at the middle. Tapping that one, that was a key target area for me. And you see the little sell-off doing the gap fill. We had a gap in the futures last night, doing the gap fill and bouncing back. All right, here's what I'm watching for going into the open. And this is a learning moment too. We have the 50 to 62.5 just overhead. I cannot get intraday bullish without a substantial close above 62.5. And look at this, 62.5 right at 4,000. Also, please do remember, where's my little thing? I'm trying to call everything up right now. The gamma wall, massive at 4,000 for next week's OPEX, and we are still in negative gamma territory up until the 4,010 is neutral. So just wanted to cover that. If we start breaking down below about 39.75, I'm interested in targeting, again, the lows from today. However, even if we snap back, the here and in worst case, just from an instructional perspective, at this point, if you were trading like a percent B signal, the stop would now be back to break even based off this gap up and rally into a key target area. So worst thing, it would be a scratch trade if something was not unwound between the 50 and the 62.5. Again, that's why I watch those target areas. The only thing I need, though, going into just from the bull case, we have to analyze both sides. Look at this 62.5 from the sell-off, the 4-day or 1, 2, 3, 4, 5-day sell-off, then the reversal yesterday. The key area, you got the 200 and the 62.5 right in front of it. We get a close back above that 62.5 before J-Pow Wednesday. We'll call it Pow Wednesday. Then I would personally be targeting the most recent high area because the probabilities were shift. Does that mean we go to new highs recently? Not necessarily. It means we could form a more significant topping pattern up here. So that is the key level. In case you can't tune in, I don't see why you wouldn't be able to, but in case you can't tune in before Pow Wednesday, that's the key level I'm watching with daily cycles at the bottom. In order for me to get bearish, we already filled that gap. In order for me to, again, tip bearish, nothing has changed until this 39.11, 39.12. What's the exact level? 39.14. It's this area, and you can use these two lows, the dueling lows. Let's see where we sit. Good morning, Anissa. Good afternoon, Charles. One of Mike's dogs needs to bring the duck to the front of the chart. Oh, boy. Oh, boy. Wow. Pow Wednesday, is that going to stick through the close? Is that going to be the word or the phrase of the day, Pow Wednesday? I sort of like that one. All right, so we got our short-term levels and our long-term levels. For the NASDAQ, again, gap up, gap fill. Remember, we also had the double triggered. The double finished with the gap fill, ran up between the 50 and the 62.5, where I've talked about multiple times to watch for reactions between those key levels. Got the reaction, the quick sell-off, and then do the same thing right here. On this sell-off bar, high to low. For bullish mode, virtually 11,775. Okay, that close above there. And at least it needs a 15-minute close, at least. Not like a 1-minute close. Other than that, on a breakdown into the open below about 11,687. Why that's yesterday afternoon's high and a harmonic right there. And the 50 on the 1 hour just happens to be there. I will watch for a return to the lows. By the way, if we break down from the lows, other great targets to utilize. Other great targets, you have this little breakout area and a 25% harmonic about 11,600. Fantastic target to the downside. Below that, you actually have a small little messy. This is actually an advanced clear path. But there's a fair amount of support down here should it go down into the open. Back to the S&P, you can pretty much do the same analysis. Sloppy clear path, but there's a lot of support in here. So let me just get to the spiders and the Qs. I know so many people trade those. The spiders, because of this little reversal, now it looks like a gap down. Yesterday's close 396.24, 394.27. So if the futures tip to bullish mode, I would not ignore yesterday's open as a first key target. A first key target, again, can be used to raise stops if you are long. and or take partial profits depending on your entry. 395.14, then the close would be my next target, 396.24, and the 397.59. We're at 394.41. My key support will be yesterday's low. If we start to sell off with the futures, yesterday's low is 393.27, which is really close to the close of 393.16. So 396.16 to 396.27. And then my major support coming in about 391.80 to 392. The breakdown level is roughly 390. The Qs. Again, small gap down, but let's see. 281.91 yet was yesterday's open. We're above yesterday's open. So on a rollover play, the futures rollover, I will target yesterday's open 281.91. We break below that, I will utilize the close from Wednesday 280.50 area. And then it would be a retest of the 278, these lows, 278.78. If we came all the way down here, I'd be watching it on a closing basis. Remember, the double is horribly sloppy double, but it is confirmed but not triggered. A rally from the gap down open, 283.85 is first target, then 285.20 area, and then if we did rally stronger, 287.27 would take us back to the 50% decline from the high on the first to the lows on the 7th. So that's how we come up with our roadmap for there. Real quick for the Dow. Again, the gap, we filled the gap on all these and we've bounced. So going into the open and consumer sentiment are really going to be important today. But unless we get back below these lows today and stop at now at break even for any percent B plays. So key support 33,765, and then my next level for the Dow would be 33,620 area. You see this strong candle body base right there. That's a significant target. Then 33,470. To the upside would just be a return to yesterday's gap open, 34.40 roughly. 34,037 to be exact. Then the highs, and then 34,240 is the key level on a closing basis. Russell, that has triggered the double, tried to rally earlier like everything went back in the double trigger territory. What's nice about this is this gave multiple times to get in at better than trigger point. The only thing is cycles are at a bottom, so it's going to get this next few days are going to be interesting. So you really have to manage reward to risk. The DAX just sitting there at the first double target, so it is either a breakdown below this low area, 14,200. Or the breakout to me now is above this 14,400. Other than that, nothing going on there. Notes has not invalidated the double top yet, pulled back to the rotation zone. So I'm keying off 114.06. We start breaking below there. My next major target is back down to 113.24. On any rally, I am utilizing this 114.24 as the high. Dollar index coming back down. This is beautiful. A thing of beauty. It needed to get to 114.14 to potentially set up a double bottom. 104.14. We got down to 104.13.9. So double bottom potential setup. Fantastic for this. I am putting on the aggressive targets for now until we know that this is the absolute low, but we do have a potential reversal target in the dollar. So I will be watching very closely on that. And interesting, even with the aggressive targets, look where it takes us back to. Look where it takes us back to the prior major swing high from before Thanksgiving. Let me just see where that sits with. And look at that, back into the weekly rotation zone. So we got an interesting setup right there in the dollar. Gosh, you gotta love this stuff. The VIX. The VIX, you have significant resistance area about 23.10 to about 23.25. So that's, unless we break above 23.25, then if we do, then I'll shift into more intraday bearish mode. 62.5 would be the key target. Other than that, not much new from the VIX. Cycles at the top on the daily for the VIX, so keep an eye on that. We could get a roll, still a bounce in the markets in a rollover play. Crude, inside day from yesterday. I'm still focusing on the breakdown play to the $70 mark to continue the pattern. Real quick, Natty Gas. By the way, did not cover this the other day, but this was a percent B buy. And we have a little follow through with the gap fill. So that was a little move back into here with that play definitely mostly unwound. Besides trail, this would only be a trailing at this point. What do we have? Because we're Euro, we went over the makeup of the dollar index yesterday. If you want to learn more about that, check out yesterday's live stream. But the Euro making up 70 or 57% of the dollar index. That was a fantastic question yesterday. And we do have a potential double top. So just like the potential double bottom in the dollar index, potential double top in the euro. Would that take us to major new lows? No, that's just retracing somewhat of this move. But I will be watching for that with the double bottom in the dollar. Pound also potential double top. I will shift those to conservative targets though once we have confirmation. I'm just putting out because we know that other side won't do. Bitcoin still in consolidation. Tesla looks like they're shutting down production of the Model Y the last week of the year in Shanghai. Was for a little gap up. Remember, we hit that 87.5. I'm watching anywhere for the support between this 166.19 to 170.17 right now, gap in front of there. You would get that gap fill on any bullish play. If the S&P and NASDAQ start rallying, it would be the bullish play to yesterday's close, 173.44. Major resistance, though, this is where I love to use the harmonics. 147.37 is the next target area. 178.46. And my major on any bullish play would be a return to this breakdown zone with the declining rotation zone on the daily. Do keep in mind we are getting the cycle bottoms on the daily. All right. Hi, American. Can you check Mama Kathy's stock Daku? Yes, it was gapping up yesterday after earnings. And we're still going to follow through this morning. I will be watching when we do get the next rollover in the NASDAQ. This will be a target back for a gap fill. Until then, it's in just a major consolidation pattern. 47, 46, 48.22 is a key area I'd be watching with the declining 50 and then 49.71. There is no fantastic bullish play in this. On any rally, it's just a rallying into a more significant breakdown zone, being 51.62. So if you're trying to play this in the short term, the upside, there's limited upside from my perspective, and then the bigger play would be on another rollover play once this gets out. But from an earnings perspective, it was a beat. You mentioned something earlier. PPI is a preview of the CPI or potentially bad CPI. Did not. PPI coming in stronger, so you could see continued, not like massive CPI, like not inflation back to 9 or 10%, but CPI could also come in stronger than projected. Yes, because the PPI is the producer index, which if they're allowed, or not allowed, but if they are able to keep passing inflation onto the consumer, it would show up in the CPI. Now remember, that is getting harder and harder. But CPI, just so everybody knows, is next Tuesday. All right? We have CPI next Tuesday. So core inflation month over month is still, the year over year is not going to be as important because of the base effect as Bob's talked about. But the month over month, if it were to come in hotter, it would come in better than 0.4 or on a core or higher than 0.3, which could be sort of disastrous for the market because it will lead to the Fed staying stronger for longer. Doubt they'll change from that 50 basis point, but this will lead to possibly a 50 basis point in Feb. I don't know. I think this might still come in line or better than expected. To come in higher than 0.4 is going to take a lot of work. Those are pretty high still in core inflation perspective. So many people will cite these numbers, but that's going to be shifting continually lower based off the base effect. Let's see. Tesla on the daily looks like the wants to squeeze up again. It could very well, especially based off of bad news. Then I'm going to have to run into the open today. I have to deal with stuff. NVIDIA, by the way, the double is now, this is obvious, a triple. So the double is no longer, gonna test this 200 area and no, this is not a new double. I would just be keying, if you're trying to play something short term for NVIDIA, it could be an interesting breakout play if we do get above about 170, 160 for a quick trip to about 175 to 175.50. That's not necessary for today. What's interesting is if we do get into a bullish open, there could be an interesting gap play with then some follow through. But this is just a flagging channel pattern, and I would not be shocked. I would be shocked if this did not retest the 200 to check that off the box for everybody. T-bag, buy it open. I already went through the level I was watching before I can shift to bullish. Already went through my key level. And it depends how aggressive you are. At this point, the early warning sign is 39.89. That's the early warning sign. All right? The key level for me is getting above 4,000, not just because it's the whole number, but really because it's the 62.5. Above there, you got the little breakdown zone, but we could see a quick retrace to pre-PPI release area, which it was trading. So that's what will be my targets if we get that move above 4,000, especially on a 15-minute closing basis. I will target, then I would pretty much target consolidation up here. Let's see. And no, we don't have a double because of this low here. The breakdown zone is about 39.75 as I listed before, but that's how I do the analysis going into the open. I'm not going to have time to do it. The tick is the market open and I have to jump. So, thanks, Sterling. We'll have to look at that after the close. With that, I hope everyone has a fantastic trading day. I hope you're all learning something here. Thank you for tuning in, everyone. I will join you after the close for a quick recap. Thank you again. Bye for now.